Well, if you were facing financial difficulties before the pandemic, there's a good chance your situation has only gotten worse. Many people are dealing with mounting credit card debt. And joining us this morning to show us how to escape it is Peter Cishecki from Everything Financial. Good morning, Peter. Good to see you.
Nice to see you, Carrie. How are you this morning?
I'm doing well. And this is a situation that a lot of people are finding themselves in lately.
Oh, yeah. The credit card debt over the pandemic time, and even before that, I mean, we hear the stories about the 20 to 24% interest rates in credit cards. They're there, but there is options where you can hopefully alleviate some of the pain and get out from under some bad interest.
I just want to address quickly the amount of interest that you do pay on a credit card, like 20 to 24%, you said. I can't think of anything else that we would ever purchase that we would have to pay that kind of interest on.
No, and it's interesting. You get some of those statements for those of you who have, carrying debt on your credit card, and you'll see the note at the bottom, keep paying the minimum payment and you'll be debt free by 2096. I mean, that's encouraging, isn't it?
Oh, yeah.
You're long gone by then. It's amazing that the banks, credit card companies can get away with that, but they do, and they will continue to as long as the environment is what it is. And you just have to find a way to fight back, take your business away from them, and look for one of those 0% credit cards.
Okay, so let's talk about the best way to address credit card debt then.
Yeah, there is 0% credit cards out there. You do have to watch out for some of the fine print, which is there's one out there right now that just came out, 0% for balance transfer, and it's 0% till May 2022. So what you have to do is look at how much of this debt can I get paid off before May 2022, and hopefully find a way to pay all of your debt off, because it's zero interest for a year. But when that date comes up next May, you're back to those 20 to 24% cards, and it's painful. But if you could get most of it paid off, that would be a huge help. Or look at cashing in TFSA. And in some cases, this is a last resort, but if you're in a low enough income where you basically didn't work during the pandemic or whatever the case may be, and you're in the lowest tax bracket, maybe you will have to dip into some of those RSPs, because the tax you will lose will be far less than the interest you'll be paying on the credit card.
I think it also depends how big your balance is on your credit card as well.
Absolutely. It could be a small enough balance where that 0% interest card just might be enough to give you that 12 months of time to get back on your feet. And there's a lot of jobs out there. People are looking at the work, and as things open up, they can get back to work. And all of a sudden there's a regular paycheck where maybe you were reduced down to 25% time before or something like that, where now you're going, okay, now I've got the regular paycheck back. I can do this. And when you're back to work, also talk to your financial institution about a line of credit. Now, if you don't own a home, maybe it'll be an unsecured line of credit that could be 7 or 8%, better than 20 to 22%, that's for sure.
Oh, absolutely. And you did talk about the zero balance transfers, but what are some of the risks of those? And should we be seeking those out?
You should be seeking those out as a stopgap, but that's what you've got to remember. These are Band-Aids. These aren't a cure. They're there to buy you some time to get rid of a lot of that debt. And they went away for a while, and now with the environment right now, they're back. And there's a few of them out there, and we're not plugging any certain company, so look for them out there for sure. But you've got to make sure you've got that free and clear by the time the expiry date on that payment arrives, which the one I saw yesterday was May 2022. Because once that date comes up, boom, you're hit with interest and it's painful. So you have to make sure you know of the date, talk to your registered financial planner, see if you can amortize a plan to actually make sure that debt's gone when that date arrives on that credit card. Because otherwise, at the end of it, it's just like the rest of the credit cards when that interest rate kicks in.
Yeah, and it can be a lot of money out of your pocket. Peter Cishecki from Everything
Absolutely.
Financial, thanks for joining us this morning. Have a great day.
Thanks, Terry. Have a great day.